You are on the Transparent FX Academy. I'm Nick, and I'm a top potter on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns that show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. In today's video, I want to speak about gold. Now, why do I want to speak about gold? Because at the moment we have a quite interesting market for a potential opportunity. So I want to give you guys a full breakdown of the situation that we currently have on this commodity. And as usual, I will be keeping the analysis as educational as possible. So first, I will be performing a multi-time frame technical analysis for it. And then we will go and see what we have from an order flow perspective by checking the commitment of traders, which is basically what hedge funds, so the non-commercials in the market are doing, which are the biggest speculators, so hedge funds. And by the end of the video, by using the combination of these two different types of analysis, we will be able to understand where we have the highest probabilities for a potential trading opportunity in this market. Now, starting here from the monthly time frame, what do we have? Now, here in the monthly, we consider the market has just provided a quite interesting pattern. We see a strong impulse to the upside, followed by a first retracement leg. The market then tried continuing higher, broke back down and created a lower low, and currently we're breaking back above, reaching the previous high. Now, this is a very common pattern. You see an impulse in the market, correction, retracement, correction, even deeper correction. Basically, this is called an impulse with a complex correction, so A, B, C, D. Then after that, what the market does is breaks back above the structure. And if you see in the market an impulse, correction, lower low and equal high, after that, what you expect is for the market to provide a correction before the continuation to the upside, basically providing this inverted head and shoulders and continuation to the upside, meaning that here on gold, what we actually expect is for this market now to provide a correction before the continuation to the upside, for the market to print this inverted head and shoulders and create the continuation that we already identified at the beginning when we said that we had the impulse and a complex correction. Overall, in the market, after an impulse and a correction, you do expect a continuation to the upside and creation of a higher high. Also, from a fundamental perspective, as you know, a gold as a commodity is a quite good hedge against inflation. Inflation should definitely kick in, actually already has. So this can easily drive gold prices even higher. So both from a technical and a fundamental perspective, at least here looking at the monthly, we can expect this market to provide more continuation to the upside. Going down on the weekly time frame, what do we see? Now here on the weekly, we consider the market has just tested this previous resistance, turned support, and provided a strong rejection to the upside. Now, as you know, in the market, previous resistance, once it is broken to the upside, is turned support. And that is exactly the level that the market tested, this previous resistance, turned support, preceding this rejection to the upside. So on the weekly, everything is quite clear. The market is rejecting quite strong support with a strong impulse to the upside. And in general, no market can go straight up forever. At some point, you do need a correction before the continuation to the upside to grab some liquidity before the next move. So here in the weekly, everything seems quite bullish, but first we would like to see the market start a correction before the continuation to the upside. Just a quick thing, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily time frame, what do we see? Now here on the daily, I had spoken about gold a few days ago. I spoke about it after this impulse when the market was here. I made a full breakdown explaining why first we wanted to see a correction and then the continuation to the upside. And in fact, that is exactly what the market did. And by the way, I will link in the description this previous analysis so you can go and check it out for further reference and more free education. However, at the moment, what do we have and how we can be looking for the next potential opportunity? Now, if we go and see, before I show you what we have on the daily, if we go and see what we have from a COT perspective, so commitment of traders, what we can see is that lately on gold, net positions have been increasing. In fact, we went from having 170k net positioning to having 198k net positioning, with 8k longs added with the last report, reaching 290k long positions from the 254 that we had here, and overall shorts have been dropping from 100k to 91k. So shorts are getting decreased, longs are getting increased, net positions are increasing, meaning that overall from an institutional perspective, gold is seen in a quite bullish way, which aligns with what we already want to see from a technical perspective. However, as we said earlier, monthly, weekly, and also the daily are indicating for a potential retracement before the continuation to the upside, because also here on the daily, the market seems quite overextended after this impulse. Now, as you know, in the market, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see that we have at 0.32 and 50% Fibonacci retracements, which are currently lining up quite nicely with the previous supply that we had here preceding all this move to the upside, meaning that at this area, we have quite strong demand and support, which is in confluence with this 0.32 and 50% of the Fibonacci taken on this daily impulse, meaning that we can expect the market to provide a correction to this a confluence of demand to grab some liquidity before the continuation to the upside. So basically, this is a quite good zone to be looking for a potential trading opportunity on the buy side for a gold. So the way in which we will be approaching this with students is as usual being reactive and not predictive. If the market will provide a correction to this area, then inside of the zone, what we will be doing. As usual, monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So inside of this area, we will be monitoring price action with students from a 4-hour perspective and lower waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding gold to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside and for the market to provide a higher high. If you enjoyed the video, make sure you smash that like button and comment below. Also, you can go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. In fact, every day you get a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also get a daily Q&A session in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out. And I will see you in my next breakdown.